Good morning to everyone. This session will be focusing on the current state of remittances and have an overview on the macroeconomic impact from remittances, as well as the impact on poverty reduction. So without further ado, may I ask Dean Yoshino to come. Thank you very much.
Thank you. Good morning again. Today, this paper is jointly written Peter Morgan and myself for Asian Development Bank Institute. In this presentation, I'm first going to talk about overview of remittances in Asian region. And secondly, how the literature will talk about the impact of remittances on the economy. And thirdly, the transmission mechanism of remittances to economic activities. And number 4, remittances are really win-win for host and home countries, and also the official and unofficial channels of remittances. Those are my presentation. First, overview of remittances in Asia. We will see India and People's Republic of China and Philippines have the largest absolute number of remittances. Secondly, 9 Asian Pacific economies have remittances over 10% of GDP. And another 14 Asia Pacific economies have remittances between 1 to 10% of GDP. This is the absolute value of remittances. Then you can see left-hand side is India. Second one is PRC, People's Republic of China, Philippines, Pakistan, Bangladesh, and Vietnam. So absolute size, Asia has a huge amount of remittances. Then next we compare the amount of remittances divided by GDP. Then the figures are different. Largest country is Tajikistan. Second one is Kyrgyz Republic, Nepal, Armenia, and so on. So this is remittance divided by GDP. And going back to previous figure, and previous figure was looking at the absolute amount. And coming back again, next page. So for example, in Tajikistan, more than 40% of the economy is relying on remittances. And there are many countries which rely on very huge amount of capital. Then the second line from the bottom is 10%. Then you can see many countries are above 10%. And between 1% to 10%, we have in Asia, there are so many countries. There are 2 lines here. Red line is growth rate of remittances, and blue line is growth rate of GDP. So many Asian countries, the growth rate of remittances are much, much faster than growth rate of their economy. Then where are those remittances come from? Origin of remittances to Asia is fairly concentrated. 65 to 75% of each country's flow come from their top 5 sources, and mainly US, Canada, and Gulf regions. But exception is Vietnam. Vietnam has about 84% is Vietnam, and US consists of about 57%. But in 8 other regions in Asia, remittance comes from separate top 5 countries. And the next second line is here. And the biggest 5 top sources are US, UK, Canada, and Gulf nations, and intra-South Asian regions. Only exception is Vietnam. As I said, it mainly comes from United States. But other regions are US, UK, Canada, and Gulf states and intra-South Asia. Then these remittances has positive impact on domestic economies. One impact is for consumption. Of course, remittances comes into the household income, so they can consume more. Second is investment. And that has an evidence for the growth impact, and that will contribute economic growth. Then how about the impact on consumption? There are mixed results. Some studies found negative impact on food and consumption. But another study shows significant overall positive impact on consumption. The next investment here, investment mainly spending for healthcare, education, and housing. As far as investments are concerned, most of the studies show there is a positive impact. Then the remittances and its relation to economic growth. Remittances often be very volatile, especially during subprime loan crisis, when remittances suddenly dropped. And the economic growth of those top 5 nations will affect the amount of remittances to each country. And macroeconomic volatility is also associated with economic fluctuations in many countries. Recently, US and UK are adopting very large quantitative easing policy, and then the macroeconomic volatility is very small. But once they start contracting their monetary policy, then remittances might go down all of a sudden. Poverty reduction and income inequality. And remittances can increase the income of lower level of the groups. But there are also the mixed results in the past literatures. And in income inequality, this could also theoretically contribute to the income equality because remittances will increase their domestic income. But still, again, the income inequality there are mixed results. And if we summarize the transmission of remittances on economic activities, one is aggregate demand effect, which has consumption investment, and increased sales of those consumptions will increase investment in the companies, and that will come into aggregate supply effect in the middle. An increase in sales, then companies start to invest more for capital stock, and employment will be enhanced, and that can reduce unemployment in the region. And lastly, the capital inflow will be offsetting the current account deficits. Many of these countries have huge current account deficits, but the remittances will mitigate those capital flows. Remittances win-win for host and home countries. For host countries, higher labor force, and also it noticed taxable income of those overseas workers contribute a lot for those host countries. And home countries, important sources of income for the people, and reduce the domestic tax base, and sometimes it's a brain drain, and social issues for family relations and so on. So remittances are not necessarily win-win situations, but overall there is a good impact for host and home countries. And next, number 5, unofficial and official channels for remittances. And if the transmission of these remittances are coming through traditional official banking business, then many people who want to avoid tax. Then people try to use unofficial channels to transfer their money. But the safety is not well established. So I think the low-cost channel has to be created in this region. And technological progress in e-banking and e-commerce could achieve those goals for reducing their costs. And next. And cost of sending remittance. In my opening speech, I told a huge remittance cost. As you can see, it cost is about 14% or 10% because each remittance is a very small amount. However, the technological progress will offset these kind of small amount of transactions in near future. And mobile banking and mobile transactions will allow us to reduce those costs. But ADB or some international organization will be required to set up the basic platforms for transactions activities and also the transaction businesses. And that has to be regulated, and at the same time, the cost has to be minimized. So, conclusion. Remittance should work very good for consumption and investment. However, the past study is mixed results. And it should be the home country and host countries should be win-win situations, but there are some family problems and negative impact. And transfer of those money will be another important issues. So I think in this workshop, I hope we could come across good results and good conclusions. Thank you very much.
Thank you very much, Dean Yoshino. I guess we see a mixed picture coming out under the first presentation. May I ask now the next presenter, Ms. Seung-Hwa Yi, to come. The floor is yours. Thank you very much.
Thank you. Thank you very much. I first like to thank the ADB for this opportunity to discuss the remittance topic with you today. And I would like to use this opportunity to give you some understandings on the remittance trends, as well as some food for thoughts on how to increase development impact of remittances. Today, I will broadly talk about three things. One is stylized facts of remittances, and second, development impact of remittances, and then I will move on to policies to increase the benefits of remittances. And here we have to bear in mind that the remittances are resulting from migration. So in order to harness or to increase the benefits of remittances, we necessarily have to talk about migration aspect as well. So, and also I think this is a very an opportune time to talk about policy aspects, because we face different types of global headwinds, such as slower growth prospects in Europe and emerging markets, and as well as lower oil prices. Of course, lower oil prices can be a very good opportunities and driver for growth for oil importing countries. But at the same time, we also have to recognize that it can dampen growth prospects in oil producing countries, especially in the Middle East, which is the key destination of many Asian migrants, especially low-skilled labor migrants. Finally, if I may, I would like to take just a couple of minutes to promote what we do at the World Bank on migration through this Global Knowledge Partnership on Migration and Development Program. So now let's take a look at remittances at the global level. So this chart you see conveys 3 points. As you see, first, at the global level, remittances are far higher or far larger than the official development aids, as well as private debt and portfolio equity flows to developing countries. Second, what it tells us is that also remittances are far more stable than FDI flows or the private debt and equity flows. Of course, when we talk about the volatility, we have to take a look at it at the country level, because, for instance, in the Philippines, we saw the stable growth of remittances even during the global financial crisis, while the private debt and portfolio equity dampened sharply. Third point the chart conveys us is that remittances have grown faster than the official development aids. So we expect the remittances to grow to $459 billion in 2015. So what explains this fast growth and stable growth of remittances? What we can think of is as the world becomes more and more globalized, people mobility has been intensified. That is one factor. And the other factor is, of course, technological development. As a result, of course, people move faster, but also money can be sent more frequently and much larger. And here we also have to think about the demand side. No, it's a developed economies start to see aging population, needing much more labor from other countries that has more youth bulge. So this type of pattern broadly holds for ADB developing member countries. And we expect that the ADB development member countries to see an increase of remittances to $336 billion in 2015. Here, I would like to take a note that the ADB development member countries as a whole account for 73% of total remittance inflows to developing countries. So majority of top 10 remittance recipient developing countries are in Asia, as the earlier speaker mentioned already, starting from India, China, and the Philippines. Other top remittance recipient countries in other regions include Mexico, Nigeria, and Egypt. So now let's take a look at the significance of remittances in developing economies. First thing we can take a look at is as a share of GDP. As this chart shows you, Tajikistan finds remittances accounting for more than 40% of GDP, Kyrgyz Republic and Nepal some 30%. Remittances are significant for the Pacific Islands. As you see, it's the Tonga, that includes Tonga and Samoa, more than 20% of GDP. In other regions, remittances are economically significant. In Moldova, Haiti, and those countries in Africa, including Gambia and Lesotho. So what this implies, on the other hand, is the economic vulnerability of these countries to remittance fluctuations that we have to bear in mind. So this chart essentially shows the share of remittances in GDP among selected Asian Development Bank developing member countries. We can also look at the significance of remittances as share of foreign reserves. And in terms of Tajikistan, you can see remittances are more than five times to foreign reserves. And even Haiti is taking into, it takes up about 11% of foreign reserves. So we can see it as a remittance is an important element to a country, so that's sustainability as it brings a foreign exchange earnings. This slide essentially complements the previous one showing as a share, remittances as a share of foreign reserve for ADB countries. So now let's move on to cyclicality of remittances. So we often talk about whether remittances can cushion household income during the bad times. So thus slowing down the adverse impacts on growth. So in other words, are remittances counter-cyclical? So we recently investigated this question and published our results in the Global Economic Prospects, January 2015. So you can you can read about our results in more detail in that publication. So we start from the fact that the capital inflows follow business cycles and thus pro-cyclical by definition to outputs. So do remittances follow the same pattern? What we found is remittances tend to go to the opposite direction, suggesting counter-cyclical characteristics during sudden stops. So here we define sudden stop as a sharp drop in capital inflows. Just to clarify, it's a 0 on the x-axis indicate the sudden stop time, and the -1 is at the time before, and the +1 is the time after. So it's the chart A shows how remittances behaved during 2008 time 0. Capital inflows dropped sharply, but the remittances still increased during that period. We indexed these remittances and capital inflow to 100 in the 3 years before time, so 2005. So this shows the remittances are counter-cyclical. And then we look at whether there is any differences between countries with the migrants geographically more dispersed or less dispersed. In other words, we are questioning the level of risk diversification effects of migrant destinations. What we found is that the economies with migrants more geographically dispersed, like the Philippines, tend to see greater counter-cyclical property than those with less dispersed. This suggests that the geographical diversification of migrants do contribute to lowering risks to remittance inflows. So now let's talk about the development impact of remittances. It largely complements what the earlier speakers talked about already. So first, let's take a look at the impact of remittances on growth. Cross-country analysis showed a weak relationship between real GDP per capita growth and real remittance per capita growth. So why is that so? First is a typical story in the growth analysis. It really depends on the political institutions a country has. And the other explanation is that the impact of remittances on growth really depends on the country's financial development status. So if a country's financial development level is low and the country faces the capital constraints on investment, remittance comes in and relaxes that constraint. As a result, it can gear towards the boosting growth. Another aspect is these offsetting mechanisms on labor supply. So one is we often talk about is lower labor force participation of remittance receiving household. As remittances goes up, their income goes up in the household. As a result, labor force participation of migrant household goes down. This is quite natural. No? At the individual level, you become less. Maybe you have a less willingness to work. It's so-called your reservation wage increases. And the other aspect of this labor supply is that the remittance comes in. It boosts the entrepreneurial activities. So it creates jobs, and that brings in more labor supply, so therefore there will be impact on growth. But how is the offsetting mechanism, and to what extent this impact on the growth? So that is unclear. And the third explanation can be through the weaker competitiveness. One, what we can look at, what studies find is that the remittance comes in, your exchange rate appreciates. As a result, your export prices becomes less competitive. And the second is a well-known Dutch disease effect. So remittance comes in, the domestic demand goes up in the non-tradable sector. Non-tradable sector prices go up, that boosts the prices of the tradable sector, so-called real exchange rate appreciation. So therefore, it weakens your competitiveness. That's what our colleagues have found in Latin America and the Caribbean countries in 2009. Another explanation came out recently by David McKenzie and Michael Clemens last year. It's available as a World Bank policy working paper. As one is that we have to look at the data aspect. The reason why we don't find this significant relationship between remittances and growth is that the remittance data itself maybe it started to improve only very recently because of the implementation of a certain this Anti-Money Laundering Act and the better measurement. And then the other thing is, like Bill Easterly said, is that this cross-country growth regression is not effective instrument to look at the relationship between the two. And then we look at essentially whether do we really find the lower labor force participation of migrant households in the Philippines. What we found using the Philippine expenditure and income survey data in 2003, 6, and 9, that the remittances increase in the migrant household, their labor force participation do tend to increase. But let's not be so pessimistic about it. It's remittances, in a sense, one way or another, it goes into economic activity. So what we found is that in the East Asia Pacific region as a whole, there is a positive relationship between remittances and growth in the long term. And then we also look at whether the remittances do have a proper characteristic of smoothing consumptions at the household as well as country level. This finding you can also find in our Global Economic Prospect, January 2015. Given that I have a time constraint, I go just briefly that the negative coefficient here means the weaker relationship between consumption changes and growth output changes, and the remittance do help decrease the correlation between the two, so it's suggesting the remittance have a property to smooth the consumption. And of course, we have to talk about this, we have to look at the remittances, an important factor to contribute to macroeconomic stability through supporting current account balance. The Philippines is an example where for the past 10 years or so that remittances help put the current account in surplus. And then, of course, there was a positive relationship between the remittances on poverty reduction. You can look at some papers here. Overall, the country studies show that the positive relationship between the two. But we also have to think about the income equality issue, whether there is any correlation between the remittance and income inequality. Some studies said, it widens the income inequality because the bottom poor do not really benefit from the international migration, because international migration do require a certain level of financing, but at the same time we have to bear in mind that the remittances do boost the economic activities, so therefore even the bottom poor benefit from the remittances through indirectly through this greater economic activities. Given the time constraint, I go over to the last one on the policy. So here I want to briefly talk about just adding what earlier speaker said, that the remittance costs still are above the 5%, the global target in the East Asia and South Asia. On average, it remains around 8% of remittance amount of $200. So what's matter is that greater competition of money senders. It's a greater competition between banks and money transfer operators to help reduce cost. And also the cash to account transfer contribute to reducing remittance costs, which suggests that the financial development in the receiving countries is important to lower the cost. So I touch on the policies to increase the benefits of remittances. So here, just for simplicity, I'll divide it into the two. So one is a country of origin, and the other is what countries of destination can do. In the countries of origin, I think it is very important to take the migration as part of development strategies, and the Philippines is a good example on this. And then second, it's diversification of occupation as well as a destination. And then third is skill development. This can be done in coordination with the destination countries as well as with the domestic industries. Because training can be done both at the government and the firm level. So firms may say that we don't face incentive to train workers because once you train, they just leave for jobs abroad. So you have this foregone cost that without a rate of return. But at the same time, once you train the workers, that this help benefit your productivity in your own firms. So firms can think of designing some built-in mechanisms to tie workers into the firm for a certain period of time. I think the Dutch Ajax football team does a very good job on this. And then the third, overall industry development can help tap on the returnees. We also have to think about the returnees. So foreign direct investment and diaspora investment can offer opportunities to fully tap on the returnees. Because studies have found that returnees can be a major source of entrepreneurship, technology, and marketing knowledge. Of course, in order for all of this to happen, we need to have a better business environment, the conducive business environment. And the countries of destination side, I think that they need to change their mind in the sense that the migration can be really an integral part of national economic development and also development cooperation strategies, sort of establishing training centers in sending countries, and also reduce the barriers to migration, such as restrictive quota systems and also visa training that we often see in the Middle East. And I think it's also important to think that the firms need to move beyond their short-term gains by providing certain career paths for migrant workers through providing some trainings and skill development. And then, like earlier speaker said, we also have to improve the channel of remittances to ensure that the remittances come through the formal channels. When the money comes in through the informal channels, we tend to have central banks would face challenges with making their monetary policies effective, especially with the price stability. But the most importantly, to achieve all of these desirable outcomes, the close cooperation between the countries of origin and destination is key. So we have this knowledge nomad, and we look at the migration as a multidisciplinary aspect, and we look at the migration from data issues all the way to the relationship and migration and environmental change. So you can see further information on our website, and should you have any burning research questions or policy questions, feel free to let us know. We'll be happy to work together with you to delve into those questions. Thank you.
Thank you very much, Ms. Sung Hwa Yi. Some takeaway messages. Positive relationship between remittance flows and per capita income in Asia Pacific in the long term, and some evidence of remittances being counter-cyclical, especially with geographical dispersion of workers. We have the third speaker, Mr. Juzong Zhang. May I ask you to take the mic, please? Thank you.
Thank you. Thank you. Good morning, everyone. Now Now, actually, my presentation, the plan is that I have 3 parts. One is on the recent trends of the migration and the remittances. But since the previous 2 speakers have already covered extensively, I will be very brief. So the second part, I want to highlight some of the findings of an ADB study we recently finished on global crisis, remittances, and poverty reduction that we just did 2 years ago. So I want to highlight some of the findings. Thirdly, to list a few policy issues. Again, the previous speakers already talked a lot, so I can be very brief. Okay, so on the recent trends of migration and remittances, the only thing I can add is that South-South migration is larger than South-North migration in 2013. So numbers are comparable. South-South migration means among developing countries. South-North means from developing countries to developed countries. So that's one. And the second is the gender dimension of migration. The women account for about 50%. This again in 2013. So that is the points I want to make. Now, let me turn to the key drivers of remittances to developing countries. Obviously, we talked about economic disparities across countries and also demographic imbalances across countries. Some countries, have a young population, a larger the labor, surplus labor in agriculture sector, and some other countries, receiving countries, the population aging and labor shortage. So that's the one. This is the most important. The second is, of course, we see increasing globalization and also global production networks, the so-called JVCs, bring migrant workers from different parts of the world. This especially for skilled laborers and managers, and so this is a part of the globalization, consequence of globalization, and also the global production networks, a lot of expatriates. Third, of course, is I think increasingly will become more important is the climate change, the adverse effect of climate change that force some people to move across countries and regions. So I think that of course, as a driver, probably will become more important. And finally, the policy aspect. Many countries use international migration as one of the development instrument policies so to promote. So these basically are 4 broadly kind of 4 drivers of remittances or migration, the migration and remittances to developing countries. Now, let me just highlight, as I mentioned, some of the findings of a recent study. Some of the key characteristics of the migration in Asia. First of all, now our studies show that they will continue to increase, right? Migration and migration will continue to increase. The second is that destination has changed, keep changing. Traditionally, of course, destination countries for migrants will be, as I mentioned earlier, North America and some European countries, and the Middle East. Now increasingly, of course, within Asia, for instance, Singapore, Hong Kong, and Chinese Taipei, and Japan, Korea. So this, and in South Asia, migration to the neighboring countries is also increasing. Third, the feature is that increasing temporarily contract and on fixed and short-term basis, rather than permanent or long-term. It's more temporary contract. It is increasing. The fourth is mostly semi and unskilled workers. So in casual workers, in construction, manufacturing, services, and domestic workers. So this is another feature. Then we have an increasing number of women migrants because of domestic services. Then is the issue of irregularity. The number, so illegal migrants, you don't have official papers, and they are vulnerable to abuse. And then commercialization. Of course, commercialization in the sense, on the one hand, you reduce the transaction cost for migration, but on the other hand, it also subject to abuse and this poor practices and so exploitation. And then, of course, increasingly, we have a more complicated diaspora, involved diaspora and other networks. So basically, our conclusion is that there's a strong need for a strengthening protection for migrant workers. So we also looked at the impact, economic impact of remittances on the sending countries. Basically, so in terms of impact, we have a positive and a negative. Already the previous two speakers mentioned the positive impacts, of course, improve balance of payment as a significant source of the capital inflows, and expanding domestic demand because of low households and low income households especially as the important source of the household income, so they can spend on consumption. And also stimulating investment in physical and human capital, right? So this is very important. And also migration and spurs entrepreneurship, right? And then you start own business after money sent back to the home country, start their own business. And also many migrant workers return to their home country, set up a new business. This is typical, in the case of China, for instance. In the 80s, a lot of Chinese students go abroad to study. Now, more and more, they are going back to China to set up their own business, and a lot of IT companies, for instance, become entrepreneurial, kind of basically that promote entrepreneurship. And all this, of course, lead to poverty reduction, economic growth, and poverty reduction. Negative impacts. Because of our remittances often, strengthen the exchange rate, right? That lead to a strengthening of exchange rate, and that can undermine trade competitiveness. Is a kind of a so-called similar to Dutch disease, and can increase inflation. And now, on impact on inequality is, as I mentioned, mixed. Some countries, I remember we did a study on Nepal, for instance. In the case of Nepal, remittances actually help to reduce inequality, but some other countries, remittances increase inequality. That, of course, depends on what kind of remittance the migrant workers, skilled workers going abroad tend to increase inequality. But if it's unskilled workers go abroad and send money back, so that will reduce inequality. And the issue of brain drain, so skilled worker going out, and also disincentives to work among recipients, and this creates social costs in the home country. So these are now we did an empirical study, look at how remittances impact on the per capita GDP growth. This is the cross-country study. We look at how growth of GDP per capita influenced by remittances as a percent of GDP. Remittances as a percent of GDP, right? So controlling for other variables, other determinants of GDP growth, initial GDP level, and human capital, investment, all these other, normally in this kind of analysis we add. What we found is that some statistical, the procedure, I'm not going into detail, but basically what we found is that 10 percentage point increase in remittances as a percent of GDP leads to 1 percentage point increase in per capita GDP growth in receiving countries. So that is the overall rough kind of approximate result. 10 percentage point increase in remittances as a percent of GDP lead to 1 percentage point increase in per capita GDP growth in receiving countries. So because we know that many countries, the remittance as a percent of GDP ratio is very high, right? 10% or even 20%. So that means remittance as a contribution to GDP, per capita GDP is quite significant. Now we also look at the impacts on poverty. These are the country case studies. We look at Bangladesh, Indonesia, Pakistan, the Philippines, and Vietnam. Overall, we found that remittances reduce poverty rate by about 2 percentage points. So again, this is quite significant, 2 percentage points low, basically. The data is in the 2000, the middle 2000, some at early 2000, some late 2000. So as a part of the study, we did this 5 country case studies. The find is that on average, the remittances reduces the poverty rate, the country's poverty rate by 2 percentage points. So it is quite significant. Now, finally, the policy issues, since I already mentioned earlier, so I'm not going into detail. Basically, I think in the public issues, the issue is how to maximize the benefits of remittances, the migration remittances, and how to minimize, at the same time minimize costs, right? So maximize benefits, but at the same time minimize costs. That is number one. And then the issue is how to lower migration and remittance costs, right? In terms of finding jobs, going there, and in terms of sending money back, right? So this is lower the cost of migration and the cost of limiting the transmitting money back, and how to facilitate the more productive use of remittances. So make sure that remittances will be used on human capital, physical investment, and human capital investment. So, and then the issue of how to better protect the rights of migrants during the entire migration cycle. And finally, in terms of policy, I think there is a consensus that the migration should be considered as a temporary and circular. The ultimate goal is to lead to development in the home country through investment in human capital and in physical infrastructure investment, right? So this is kind of a consensus view is that migration is temporary and circular, and the ultimate goal is to the development in the home country. So let me stop from here. Thank you.
Zong, very, very interesting presentation, picking up on some interesting messages that South-South remittance flows now has dominated North-South remittance flows in 2013. And also from the gender perspective, migrant workers now, women migrant workers comprise 48% of total migrant workforce. I think what another important point from the policy side is what basically brings us all here today. How can we find solutions to maximize the impact of remittances, the benefits of remittances, while minimizing many of those costs that are associated, particularly on the labor side. With that, we have concluded the 3 presentations. Now, I'm pleased to hand the mic over to Peter Morgan, and he can give us some comments on the presentations. Thank you, Mike.
Thanks very much, Bruno. I'd like to thank the organizers for inviting me here to this very interesting conference. So, let's see. Okay, so I'd like to briefly summarize the findings that have been mentioned today by the 3 speakers, who I think cumulatively have given a very complete picture of the current data and an analysis of remittances. So I'll talk a bit about the economic importance and the empirical evidence on the impacts of remittances on growth and poverty reduction. But then would like to sort of focus the policy-related discussion on a couple of issues. First is what in which ways can we increase the effective use of remittances to promote growth in general? And in particular, in what ways can a policy can promote the use of remittances for investment? Because I think that ultimately one of the prime drivers of economic growth is the ratio of investment to GDP. So if you can get a significant flow of those remittances going into investment, that is going to be likely to boost your economic growth rate. Certainly all the presenters have, I think, given pretty much the same picture on the importance of remittances, and the basic answer is that they are quite important. As mentioned, 9 Asia-Pacific economies have remittances over 10% of GDP, and of course, Tajikistan was way up there, close to 50%. Another 14 odd economies in the 1 to 10% range. And if you look at by country, the high remittance countries tend to be concentrated actually in Central Asia and the Pacific. Also Bangladesh, Philippines, and Sri Lanka, and I should mention Nepal also. And also, very key point, these flows are very important and large compared with other kinds of fund inflows, actually larger than private debt and equity portfolio flows, much larger than official development aid, and most important, relatively stable. And that, of course, given the vicissitudes that we've seen in the global economy over the past decade or so, that's a very desirable feature. I would point out, though, that we saw a lot of very precise data estimates there, but in fact, we don't really know how good the data on remittances are. We do know that a lot is not captured by the formal data. Just witnessed the story by Mr. Espinella in the first session saying that he took the cash home in his pocket, or somebody else took it back. So we know that the official data is picking up part of the data, but there's still a lot out there, and we don't know how much that it is not really being tracked that well. Then in terms of the empirical evidence, generally positive impacts, there's a fair degree of evidence that it's positive for consumption, and it helps to stabilize consumption. Some evidence in support of macroeconomic stability, also stabilizing the current account, offsetting some of the volatility in the trade account, and I think pretty clear impacts on poverty reduction, although maybe a bit more debate about the impacts on poverty rates. But I would say that my impression of the discussion overall is that the impacts on investment and growth are probably a bit less clear. If you look at investment, almost certainly there's an impact on housing investment. People do tend to use the remittance inflows to build their own house, but the transmission to other kinds of investment, to industrial investment, seem less clear. And I think that also falls out of a lot of the discussion that we had in the first session, which I thought was quite good, about the limitations of the financial sector's ability in many countries to recycle those remittance funds into the formal financial sector and to be used ultimately for credit and business growth. And of course, I think also there are data issues. This is not really the place to get into methodological issues, but I know there's a big debate in the literature about whether it's better to use macro data or survey data, and some of the results do vary quite a bit on that score. Also, there are issues of Dutch disease, and then also inequality. There still seems to be some a disagreement in the results about whether that improves inequality or actually makes it worse. So let me go on then to describe the ways to increase effective use of remittances. And I think there's a general conclusion that remittance costs in general are still high, particularly in the Pacific and Southeast Asia, and there's a real need to promote measures to reduce those transmission costs to get them back into the country with more of the gross amount left. But then there's a question of what to do with them once they're back in the country to have a greater impact on economic growth and development. And I think that the first point that was mentioned various times is to promote the use of formal channels, which will make it easier to get those funds into the domestic financial system. And here also there's a significant role for innovative technologies. But I think this ties in with the broader question, again, which was mentioned a lot in the first session, about how to promote a financial inclusion in general, because presumably a lot of these remittance flows are coming to people who may not have very good access to the formal financial system. And so the basic question is how to increase that access. And so things like greater accessibility of banks or bank-type institutions in rural areas that could accept those transfers. But at the same time, you have to give people a degree of comfort, both about the viability of the banking institutions and their own legal stance. So you have to strengthen the regulatory and supervisory environment, and that includes consumer protection, and also to introduce various innovative technologies like, for example, mobile banking. Now, getting specifically into ways to promote investment, at the first stage, you could think of various kinds of investment vehicles to tap directly the savings of overseas migrants. And again, this was discussed a bit in the first session, and people have talked about things like infrastructure bonds, in addition to other kinds of financial products made directly available to the overseas workers. But then the second question is, how do you tap the savings in the domestic market via financial inclusion? And so again, you need greater access to savings products at financial institutions. Bank deposits, perhaps hometown investment trust funds might be some way to mobilize funds at a village or a town level, and again, mobile banking and other innovative technologies. Next aspect would be to promote financial literacy and financial capability, so people have a better understanding of the financial options that they have to use the funds that they've received from overseas. And again, you need to strengthen the regulatory and supervisory frameworks and the consumer protection framework, so that people have a degree of comfort in putting their money into the formal system, not under the mattress or something like that. And then, so that's the sort of supply side, where how can you get more of those funds into the formal financial sector? But then on the demand side, you have to take greater steps to make that credit available to those small entrepreneurs who are perhaps coming back or trying to set up businesses, so that you need to increase the access of SMEs and startups to finance, so that, for example, you can do things like expanding and developing credit databases, also looking at rules for collateral, because those tend to discriminate fairly heavily against SMEs. And you may also want to consider government guarantee programs, that sort of thing, that will help basically subsidize the cost of lending for small enterprises. So I think it takes a very holistic and concerted effort to try to match up both the demand and the supply sides to get more of these remittance funds going into investment. So just to conclude, certainly remittances are very important for a number of Asia-Pacific economies. The evidence on the economic impacts is mixed, generally positive on things like income, consumption, and poverty reduction. but less so perhaps on investment and growth and income inequality. And again, probably there is some reduction in domestic labor force participation in the home country. But I think going on to the policies, that you do need a comprehensive policy approach toward financial inclusion, both on the demand and supply side, which could be adopted to increase the potential impact of remittances on investment and growth. And more efforts are needed to reduce transfer costs, including innovative technologies. So let me finish there. Thank you very much.